What's going on, guys? Resilient FX here, coming at you with another video. Today we're going to be doing a market breakdown for the euro versus the Canadian dollar. So this is the after shot of the trade we took Sunday at 10 PM when I sent the trade signal out. As you can see, we profited nicely with 82 pips within a couple hours. Today I'm going to be doing the market breakdown and the technical analysis for this currency pair. So as you can see, it's a clear chart with no technical analysis, and I will be going through the fundamentals with you. So what I like to do is start in the monthly time frame, and with the monthly time frame I'd like to only place a few key level of support and resistance zones with only maybe one or two trend lines. So looking at the monthly, as you can see, we've been in a downtrend since April, and only last month we only got some bullish momentum, which was around 2% increase at 308 pips, which is good. For a month, there's some volatility, but not much volatility, as you can see, compared to other months with these candles. These are looking like 5% at about 850 pips. But getting into the technical analysis, starting with our trend line, as you can see, I can see a nice trend line being respected right here. It's been hit once, twice, 3, 4, 5, 6 times. It's now come down to retest it, and it has rejected it. It's not hit it nicely, but it has rejected it, and we've now seen some buyers in the market pushing it back up, respecting this trend line. From there, I like to place my support resistance with my brown, and with all support resistance, I like to work from the bottom to the top. It's just an easy way of working and keeping your chart nice and simple. As you can see, we can already see some support zones here, but we don't want to overly complicate our charts and just overcrowd it and make it too hard to read and see what's happening. So until I see something that is quite respectful in the zones that we're currently trading in, then I won't place it, because we won't get to that point within 2 or 3 months time. But right here I can see some nice support. We can see some nice support here, but I won't be placing it. We've got nice resistance here, here, and also support here. So you need to be very pinpoint accurate when placing your support resistance, because these are key points in the market. So from resistance to some support now, we then place our resistance, which is right here, and we're currently on monthly resistance, meaning this is a good selling point, as it has been in previous months here, here, and here for this whole period. Right the way from June to October has been a huge sell-off point, and from there we're also going to place some resistance just there. As you can see, wicks here, wicks there, couple wicks over here, and support over there. From our monthly, we like to drop down into the weekly, and now change our color over to red. And again, what I like to do is always like to zoom out and see what the overall picture is for this currency pair. Starting from the bottom, working our way up again. With weekly, you can plot this a bit more, just because it's in the weekly time frame, and I do like to hold some swing trades. So this is key for me, and as you can see on weekly, it's also acting now as a monthly support. But right here is where we like to place it, covering all of this, and all of this. Again, if you don't like trading with candles, you can change it to either bars or a line chart. Line chart, people like to place their support resistance, because again, you can see it nice and clear, and it's very easy to use, but me personally like to use my candles. Now we've placed our monthly and weekly, but I can see a weekly downtrend over here, and if I do change it, I can place a trend line starting from this wick right down to that wick, like so. And it's also trading in a channel, which I can also see around there, but I'll come back to that in the 4-hour and daily. Up and down into the daily, we then like to zoom right out again, and I like to use my text notes to refer to, and my daily is orange. So now dropping down into the daily time frame, we can plot a bit more just because we can afford to. So I do see some resistance over here, but it's covered in our weekly, so I won't be placing it. Also got a key level of support structure over here and some resistance over there. From there, moving our way up, we got some resistance, but some nice support right here. Very key support. All of this is very good support. Our resistance is covered with our weekly. Support covered by our monthly. And now this is when we need to be pinnacle with our technical analysis. Getting into these zones around about here, because we're currently around this price action. We've got nice support there. Moving up from our support, we got some resistance along these areas, these areas, these areas. And again, this is a 4-hour daily, and daily right there, boom, resistance, 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 more resistance, and again right there, and then we leave it at that. That is our daily. So if we drop it down into the daily, as you can see, currently it's battling between daily support and daily resistance. And I plot that quite zoomed out, and as you can see, it's got very nice support, very nice resistance, hitting it nice and clean over here, here. So if you kept taking shorts on these, you'd be profiting. And if you kept buying on these, you'd be profiting because it's hitting your TP. You would buy here, shot up. You would buy again here, it shot back up. You sold here, and you'd have your TP around there. So now we're on the 4-hour time frame zoomed out. Most of our support resistance have been plotted, so we're just looking for small areas like here that is on the 4-hour time frame that we can plot some more resistance and support. Here we've got a key level of support back there. From support we're looking for the resistance, key level resistance. And that is it for our 4-hour. So that is our support resistance done. And now we're looking for the channels and the trend lines, which there is one for this currency pair. If I zoom out, it is trading in a nice channel slash trend line. I think the trend started from around here. And you want to be pinpoint accurate when placing your trend lines. There we go, it's hit it once, twice, 3 times, 4, 5, 6, 7, 8, and it's not broke it since April, showing there's a great downtrend taking these shorts around here. Again, if we start with the downtrend, I like to make sure they add up equally, and now we want to place it so it's pinpoint. There you go, as you can see, it's now trading in a nice channel coming down. You would sell here and you would buy here. So as you every time selling, buying, selling, buying, selling, buying. And this is moving in 700 pips, which is a lot of pips, and that is great for that time. It's taken anywhere between 15 days to a month for you to make 700 pips, which people can't even make that in a month, which is very good. Now getting down into our technical analysis for this currency pair. Now I spotted a few confirmations, such as heads and shoulders, my Fibonacci, support and resistance, and a break of the trend line slash neckline. So now, starting off with the Fibonacci, which is quite easy, you can place your Fibonacci in quite a few places. Now I like to do mine from the previous high, from the swing high to the swing low, and I like to drag it out. So as you can see, our key level is 61.8%, but we actually entered on our 38.2%. Now this gave a great entry for a Sunday, especially with a gap opening on the market. So with our Fibonacci, I then spotted a nice heads and shoulders formation. Now this is quite hard to spot from the iron, this does take time, but the neckline was here, and I'll do this in a different colour for you all to see nice and clear. So as I said, here is our neckline, and now spotting our left shoulder, which is right here. As you can see, came down to test the neckline, went up to create the left shoulder, and came back down to the trend line. So that right there is our left shoulder. From our left shoulder, you then go and make the head. So as you can see, down, up, down, shot up to make the head, which is right there. From the head, we then see it to test the neckline, which it did, it respected it. Went back up to create the right shoulder. And now what always happens after heads and shoulders, and this is a key confirmation for me, as soon as it created the right shoulder, it came down. Now if I zoom in for you all to see this nice and clear now. So here's our left shoulder, here is our head, and there's our right shoulder. So came down, went up to create the left shoulder, back down, back up to create the head, back down to retest the neckline, back up for the right shoulder, and now as you can see we have seen a break of the neckline, which is as expected for a heads and shoulders formation. This is a key confirmation, and with the break of the trend line as well, we also took the short, so we entered on the 38.2% Fibonacci, which was right there. Remember right, our stop loss was around 79 pips, which was right there. As you can see, we was only getting taken out by this one wick, and all the other wicks had us covered. All these wicks had us covered, and it was in a good support zone. Now our take profit had to be inch perfect. Our take profit was at 82 pips. So our trading setup looked something like that. It was a risk to reward of 1-to-1. I had to take what the market was offering me, which was a 1-to-1. I couldn't find a greater stop loss just because I will get taken out by all of these. But I knew it had to be around a 1-to-1. And my TP was set in place due to the previous low of creating the head, and also some key resistant levels around here. Was around here. We got some support and resistance here, support and resistance. So I had it on my support and resistance zone. But with all head and shoulders formations, you need to measure from the neckline to the head, which is about 320 pips. We should see this pair crumble a lot more. So from the neck, 320 pips is around there. So we're expecting to see this pair drop a considerable amount. It can certainly drop to here, which I am looking to take the short on very soon, which again is about 250. You can do your Fibonacci extensions again, which is considerable amount of pips, 130 and 207. As you can see, with our heads and shoulders formation right here, our trend line and our Fibonacci, these are some key confirmations for you to be using when trading, and this is what gave us that great opportunity to take the short just Sunday, and we've already hit take profit, and it's only Monday morning. If we zoom out into the daily time frame, as you can see, we're trading in the channel. We've got our monthly resistance, which is respected and dropped. It's now currently down around 40-50 pips on some key support over here, but we should see this pair drop at least to its daily support and resistance, or our key level Fibonacci. I hope you guys enjoyed this video of how I do my technical analysis and how I send out my signals, waiting for my confirmations, and how I go through my support and resistance, plotting my trend lines, Fibonacci, and spotting the heads and shoulders of how to place it. And also for my fundamentals, I like to look at my FX book. This company gives out great news on their economic calendar. As you can see, it shows the impact, if it's going to be high volatility or low. It gives the previous, the actual. So, and it ticks it once it's done, and it tells you when it's coming out. So I like to look at this when entering a trade if I think there is a lot of fundamentals. But this is mainly surrounding the pound and the US dollar. They're the two main currencies that get affected by news, and they have major volatility in both pairs. That is it for today, guys. I hope you all enjoyed this video, and I will see you next week.